everybody. Welcome to today's edition of the 1Million by 1 Million podcast. Today I'm here with Suresh Shanmugham from Saama Capital. Suresh, welcome to the podcast.
Thank you, Saama. Pleasure to join you today.
All right, so what we're going to do is get to know you through this call and help our entrepreneurs in particular get to know how you think about investments. So tell us about your fund, tell us about what your investment focus is, how big is the fund, what size investments do you like to make. Let's just get the basics set and then we'll figure out where to focus the conversation.
Sure. So Saama Capital is an India-focused venture firm. We actually got our start back in 2006 when the team was part of Silicon Valley Bank. So we were the India team that was at SVB and raised a pool of capital in 2006, 2007, and began our investment journey there. We primarily early stage investors. We have since spun out of Silicon Valley Bank. That happened in 2012. And we rebranded under the name Saama Capital. And we've raised 3 funds under the Saama Capital name, our most recent one being Saama Capital 4, which is a $100 million fund that we just wrapped up about 45 days ago.
And what size investments do you like to make?
So our initial check size will vary. If we're doing something at the seed level, which we'll do on an opportunistic basis, it'll be in the $500,000 to $1 million range. But we're more apt to do pre-Series A and Series A investments that are in the $2 to $4 million range.
Okay. And what about industry sector? What do you like to invest in?
So from an industry standpoint, one thing that we've always been very committed to is being fairly diversified from a sector standpoint. We have invested across a broad range of industries. All of our investments have a strong India connection to them, and part of the thesis is benefiting from the economic growth that's happening in India. So we've invested in a wine company in Sula Wines. We've invested in e-commerce. We've invested in enterprise software. We've invested in education. So it's a fairly broad range of opportunities that fall within our mandate.
So let's double click down on some of your portfolio companies. What have you invested in and what was the thinking behind those investments? So this will give our audience an insight into how you look at deals, what captures your fancy. And then if you've had exits, you can also talk about exits because in India, the exit question is a big question. Of course, today we are speaking a day after a major event on the exit front.
No doubt. No doubt.
Flipkart being acquired by Walmart.
The official announcement happened, although it's been rumored for a number of weeks now. Great to get the confirmation.
Right.
But if I take a look at across our portfolio, a couple of the companies in Fund 1 to give you a flavor of some of the things we have invested in. We were an early investor in Paytm back when it was still a mobile value-added services company. One of the things that attracted us to that business was really the founder, and I think that's a theme that you'll find across the investments that we've made. We just thought the world of Vijay Shekhar Sharma and his enthusiasm and his honestly vision on what he could build and build in India, and we were a Series A investor there with our initial check coming in early 2007. So it's been obviously a long time and a strong journey with him, and really the pivot happened there in the 2011-2012 timeframe where Vijay took it from a mobile VAS company to the payments, and that's led to the tremendous growth and market cap, market value creation that's happened over the last 4 or 5 years.
So I understand that in 2007 it was really betting on Vijay as the entrepreneur. How long did you stay in that company in terms of, did you seek an exit somewhere along the way? What's been your evolution with that company?
So we actually have exited a good portion of our position. We, the company, I think probably a year and a half ago, split into three different pieces, and we had ownership in all three pieces as a result. And what we did was we sold off the piece that contained, the payments business, the Paytm wallet that everybody's familiar with. And but we maintained ownership in one of the other entities called Paytm Mall, which is the e-commerce side. So we remain invested, although we've monetized a substantial portion of our investment in the company.
Okay. So aside from Paytm, what have been other companies that you've invested in? And please focus the discussion on IT and IT-enabled services, which is the bulk of our work. I do remember when you guys were getting started, I had lunch with Ash, and he told me about your investment in Sula, and he was very excited about it and all of that. I'm sure those are great stories. But for this conversation, let's focus on the IT side.
Sure. So I think that another company that we were early investors in with a similar theme was Tutor Vista. So we had backed Ganesh and Srini back in 2006. And, Ganesh is somebody that we had, I guess, indirectly backed when he was doing customer asset, because SVB had made an investment in Jump Startup, which had invested in customer asset. SVB back in those days, we had the ability to make strategic investments in funds, kind of to obviously get access to the portfolio and the upside, but also to build relationships with the GPs of the firms. So we obviously knew Ganesh, and he knew us, and we got introduced. And after one meeting, we kind of said we would love to invest. And he said, "Listen, I've known you guys for years. Would welcome the opportunity for you guys to participate and work with the company." And so as a result, we were given the opportunity to invest as shareholders. And Ganesh still likes to tell the story to this day of he had never really spent time in the Valley, and when he needed to raise his Series B round, he parked in the SVB office and had a number of firms that Ash and I had introduced him to kind of really help bring that round together. So again, while we were very interested in the online tutoring opportunity that he was building, we really liked the fact that it was Ganesh, and you had a serial successful tech entrepreneur at the helm.
And what about more recent ones? What's happening in the more recent years?
So in terms of more recent companies, maybe going to Fund 2, one tech company in Fund 2, one of several actually, was we were investors in Snapdeal. And we had came into that company in I think 2013 out of our second fund, the first Saama vehicle. And we met with Kunal and Rohit and kind of really liked what they were doing. It was a difficult time in the e-commerce world, and we really took a liking to what they were doing and how they were thinking about the business. And I think we came in at a good time with a round that was being led by eBay. I think Intel Capital was participating, and that was really kind of as e-commerce as we know it was really starting to take off. And again, thought it was a good sector. It was out of favor, so we were making a contrarian bet, and it worked out phenomenally well for us. We actually
and what year was that?
We actually invested in, I think, 2013.
2013, okay. And did you exit that one?
We did exit that one in 2015, October of 2015. We sold our shares in a secondary transaction to Ontario Teachers.
That's interesting because that company has gone in a different direction since then, and it seems like actually, why don't you talk about what you see that's in that situation, and that would give us a good segue into a trend discussion on Indian e-commerce, especially given all the shifts that are happening there. What is your current observation, analysis of the Indian e-commerce market?
So I think, on the Snapdeal front, I mean, in some ways it's, it's been almost 3 years since we exited. And, we felt we had a great opportunity to provide returns to our investors. The company performed very well, in line or even a little ahead of what we had underwritten to as an investment in our investment memo. And, we kind of saw the market really being frothy on the e-commerce front. When you have the type of funding activity and the valuations being discussed, and we had several folks that were interested in our position, and Ontario Teachers was very aggressive about wanting to buy out our stake, actually at a very good price. In fact, a premium to the primary round that had just closed. And Ash and I, having the benefit of spending a lot of time in the U.S., kind of know how these cycles run their course. And we knew on the other side of the a bubble-like period that we were going through that there's a lot of damaged companies that are left behind. And we didn't think that Snapdeal was necessarily going to be that, but we knew that there was going to be a downdraft that would affect all the companies. And we felt, listen, our jobs are to deliver returns to our investors, and we had the opportunity to do so. And the time was right, and it would certainly validate our investment approach. It would obviously help us in raising our next pool of capital. And, it was the right thing to do on another number of fronts. And actually, it helped bring a deep-pocketed investor to the company. So there's a benefit for the company as well.
So what happens to Snapdeal now, given the current scenario?
I'm reading it in the press just like anybody else. It seems like they've significantly cut the burn rate. They've obviously trimmed the company back, and they are monetizing some of the assets that they have to help support their cash position to allow them to stay at the table. So, I think, they've sold Unicommerce, or at least have an agreement to do so. They sold off, I think, Vulcan Logistics. They sold off Freecharge. And I think, again, I think Kunal and Rohit are very savvy entrepreneurs and operators. And, while it may not seem obvious what the ultimate game is, they're staying at the table. And my sense is they'll find a way to survive. And not only survive, I believe they'll thrive. It just doesn't, it isn't obvious what the game plan is just yet to everybody on the outside.
Give me your analysis of the Flipkart, Walmart, Amazon situation.
Listen, I think India is still a prized market to be in. And, there's a clear number one and, and a clear number two. And I think you have Walmart that made a very bold move as part of their whole kind of push towards e-commerce with, beginning with the Jet.com acquisition to, be in the Indian market and be in it for the long haul with a major move to take control of the number one player. And they also fended off Amazon, which is no small thing to do. So I think it's a great thing on a number of fronts. I think you've got a strategic exit. You have a success story. I think you have people that are would-be entrepreneurs that now see the value of what equity can become. Because think about how many people's lives who've been lives that have been changed by the success of Flipkart. Financially. Not just their immediate family, but potentially generations to come. It's a great thing. I think it's a watershed event and something that really validates the entrepreneurial path for people considering it, I think, in India.
Yeah, I have to say this sort of an exit for the Indian market was absolutely necessary.
Absolutely. I think you had everything else lining up. I mean, you have capital, you have smart entrepreneurs, you have technical talent, you have so many things. To me, the one thing that was missing was this kind of light ship type event that really kind of stands out as, listen, you could be can you become the next Flipkart? And, Flipkart now is a reality from an exit and a realization of value creation.
So if you were, of course, your primary business is in the small investment area. You have a $100 million fund and you're doing Series A, pre-Series A, maybe a little bit beyond kinds of deals. What is your current e-commerce strategy in terms of early stage investments?
I think from our standpoint, we're certainly open to looking at e-commerce opportunities. I don't think there's much of an opportunity in horizontal plays because I think that game is over. You know who the winners are going to be. But, there are opportunities, I think, in vertical categories that we will continue to, look at. I don't think we have a particular sector that we believe is, one that we're looking to make an investment in. But, one of our actually only remaining e-commerce investments is a company called Bluestone in jewelry. We were a Series A investor there, and, that company continues to grow and develop. And, the market size for something like that is fairly huge.
And what is the category?
So jewelry, fine jewelry.
Jewelry, okay, all right. So my actually thesis on e-commerce investments, our life is about early stage. My analysis of the Indian market for e-commerce going forward is actually private label brands. So if in any niche, any category, you can come up with a branded e-commerce story that is an internet first brand and later omnichannel brand, I think that is going to be a more defensible, more sustainable business building opportunity than any kind of pure logistics play.
Absolutely. No, I think Bluestone is in line with that thesis. It is a, branded fine jewelry, design forward, things that they manufacture themselves. It's again, it's it's not a trading business.
Yeah, and I think part of the issue we've had in the e-commerce category is mostly it has been trading and very little in actual branded product development. And
Agreed.
That's going to need to shift.
Agreed.
So a little bit more on the exit question on India.
Sure.
So this was, of course, a very big, the Walmart acquisition of Flipkart was a very big event and it needed to happen. It has tremendous positives, tremendous validation of the India story, India venture capital story. So it's all good in every direction. What about otherwise? What is your assessment of the exit scenario outside of the Flipkart deal?
No, I think it's happening. I mean, we one of our portfolio companies from Fund 1, a company called Saio Health Analytics, just announced it's being acquired by EXL. So a strategic exit for cash, $240 million. We were a Series A investor there. And this is actually the fourth exit in our portfolio in 2018. So I think you're seeing it happen. And actually, 3 out of those 4 exits are to strategics.
Can you talk about those exits?
Sure. So the other one is a company called Mezi. Mezi is an AI company focused on travel. They were acquired by American Express. The other one is a company called Mobilia. Mobilia was bought by Quest Global, which is a services company. So, and our fourth exit, we were an investor in a company called Shubham Housing Finance, and we sold our position in a secondary sale.
And what kind of, in the 2 cases where you talked about strategic exits, what kind of capital infusion and what kind of exit prices are you seeing? My question is that you described the $240 million exit. How much money went into that deal and how much money went into the other deals and what kind of price point did they exit at?
So for Saio, that company raised under $30 million. or 25 million. I can't remember, but it was a very capital efficient. The company has been profitable for 4+ years, and highly profitable at that. So again, very good multiple on the capital invested. On Mezi, again, the company they did a financing that we participated in as a Series A in the summer of 2016. And, we exited in, February of 2018. It was a $9 million raise, and they still had a good portion of that cash on the balance sheet.
And the exit price was?
It was not disclosed.
It was not disclosed, okay. So can you give me a benchmark on, was it an under $50 million exit, under $100 million? I mean, it's some range?
Over 100.
Over 100, okay. Fair enough. So 9 million capital raise, over 100 million exit. What was the other one?
We had a company called Mobilia.
And what was
they got bought by a company called Quest Global, services company. And again, very limited capital, outside capital that went in. I think, under $4 million.
Under $4 million, okay, great. And the exit price was?
Not disclosed.
Range?
25 plus.
25 plus, okay, excellent. So, the other side of this is that there is a bunch of, like Nutanix acquired a company recently. That was the company was doing $4 million in revenue. Yeah, Minjar, exactly. And they didn't have any financing. And then Qualys has acquired like 3 or 4 companies recently, also very small, very capital efficient.
I think Minjar did have some financing. I think they had some angel money, and I think Bloom was also an investor, but it was a small amount.
Very, very little, yeah, very little. So that's good. I think the story that needs to come together for the ecosystem to really get the next level of boost is that there are a lot of acquisitions happening and a lot of exits happening. Because, even here, the vast majority of exits are M&A exits. It's not IPOs. IPOs happen, but not that many. So the strategic acquisition story just needs to come together and for everything to flow, for the capital to continue to flow, or for the entrepreneurs to continue to be excited and so forth. So it's good. It's a massive, massive journey for the last 10 years. I started working on the Indian ecosystem and trying to, shepherd, promote, whatever, evangelize the Indian ecosystem back in 2005 through my blog. We started 1Mby1M in 2010. And it has been, India has always been one of our biggest geographies, and it has been a really interesting journey. Our roundtables are continuously full of Indian entrepreneurs, and more everybody is generating revenues. That's the first step, right? And everything is like, if you can generate revenues, a lot of other things can be worked out.
No doubt.
And how do you parse unicorn mania? India went a bit crazy for a while. Silicon Valley, of course, went crazy, but I had thought at that point that India was not going to go so crazy over this unicorn phenomenon, but it did. How do you parse that? How do you analyze that?
Listen, I think you can see patterns across markets, and what happens in the U.S. Does happen in India as well. So I do believe it's not a surprise, and I think people put capital raising ahead of business building. Because the money was available, and the valuations. People like big numbers, especially when there is monetary implications for them. So I think it became something that was a bit of maybe an ego boost. It was a way to benchmark yourself versus others for the savvy entrepreneurs. But again, those are periods of time that are anomalous. And in some ways, I'm kind of glad we're past that phase, because I think it separates out, the entrepreneurs that are in it to build a company versus those that are in it to, focus on the optics of, big numbers and, cursory success.
So other than Snapdeal, were you in any other unicorn deal? And you very smartly played Unicorn Mania in your favor, and you sold your position in Snapdeal at the right time. I suspect a lot of others have not sold their unicorn positions at the right time, and they're stuck with a bunch of zombies. And the entrepreneurs who have raised too much unicorn mode capital are stuck as zombies. What is
we have two
extent of the zombie phenomenon? Huh? Go ahead.
So we have two unicorns in the portfolio, Snapdeal being one, which we exited, and Paytm, which we've largely exited.
Paytm is fine, yeah. Right. Okay. Well, what is the extent of the zombie phenomenon because of unicorn at the wake of Unicorn Mania?
There are companies that are I don't know whether I'd call them the Walking Dead, but they've got a lot of liquidation preference. They've raised a lot of money,
yes.
Therefore there's a lot of liquidation preference sitting above the entrepreneurs, and in some ways they have to ask themselves, okay, what's in it for me at this stage?
Right.
Without a restructuring of liquidation preference, what am I really working for? I may own X% of the company, but it's under tens of millions or maybe even hundreds of millions of liquidation preference.
Yes. Mm-hmm. Yep. Okay. Is there anything that you would like to say to the audience of entrepreneurs who may be interested in working with you as a parting comment?
Listen, I think we have a fresh pool of capital. We're very committed to early stage investing, and we believe the best is yet to come in India. We really have, Ash and I bet our careers on this geography, 12, 13 years ago, and I've never been more excited about the types of entrepreneurs that we're meeting and the opportunities that they're going after. And to see now repeat entrepreneurs come out and having, the whole cycle happen, kind of investment through exit happening more frequently and with, great outcomes. To me, it's something that we are absolutely thrilled about and very excited to continue to be part of the ecosystem.
Great. Well, excellent conversation, Suresh. And audience, thank you for listening. As you know, you can come to any 1 million by 1 million free mentoring roundtable. Just go to the website and register, and we look forward to working with you on your projects. And we'll be back soon with another edition of the 1 million by 1 million podcast.